Guess what day it is, everybody? Guess what day it is? It's hump day. What's up, buddies? Hope you guys are having a great day. Welcome to today's edition of the Daily Market Commentary, the hump day edition, Workout Well Wednesday. I love that fitness rush. Talking a little Workout Well Wednesday. So good to see you all here with me this morning. We're going to do what we do each and every day, taking a look at our 10 to 12 futures markets from an educational perspective. Looking for some breakouts and reversal opportunities, although we're seeing a little bit of sideways price action. Has anybody found that the market has been a little bit meh lately? Anybody else find the mehness in the market? There's been a little bit of meh in the market lately. And I was just talking about that this morning with Justin about, when the market's not giving us a lot of great trading opportunities, should we force it? Let me ask you that. Should we force it? No, we shouldn't force it. No, we shouldn't force it. We need to be patient and wait for things to come into our levels and into our areas. And so sometimes the downside of doing a daily market commentary is that you expect me every day to find really great trades when they just don't always exist, right? And I don't want to make it seem like every day we're going to find opportunities, because we're not. And so, just keep that in mind as we're looking at this market, that we don't have to trade every day. And breakouts are very effective when they've got the right setup for us. So a couple of things to look at for today as far as areas go. So the S&P yesterday, we had talked about a potential for a little breakdown kind of below this region. We did get a little bit of a breakdown. Isn't that your job? To find amazing levels every day? Yes, that's exactly it. No, my job is to be a professional risk manager. That's my job. And so when I look at the S&P, the level that I see that I think sticks out for me that's pretty good is this hourly level right here on a deeper pullback. If we make it back into that region, I think that actually to be a pretty effective zone where we can find an area for a reversal if price comes back into there. Stop just below this region here because it's below the lowest wick on the 15-minute chart. So I think that's actually a pretty good little area if we do get a pullback and a slight reversal. Now, I will say that hanging out around these highs are not a bad thing, because we could still get basing and break out above those highs. I think that there's a better chance that we'll pull to all-time highs. And then typically what happens once we pull to all-time highs, those of you that are regular viewers of the daily market commentary, what typically happens after the market sets up a new all-time high? When in the S&P, specifically in the S&P more than really any other market, whenever we get a new all-time high in the market, we typically get what? Just shortly thereafter, if anybody remembers, because that's something to consider. And we were more looking at it last year. But yeah, typically you get a little bit of a rest after an all-time high. Not so much so that it changes the overall big retrace, the overall big picture, but you usually, when you get an all-time high, get a little bit of a retracement or a rest. And we were looking at that going back last year. As we were putting in all those new all-time highs through here, we would look and see, okay, look, new all-time high, couple of days, pullback. New all-time high, couple of days, pullback. New all-time high, new all-time high was here, couple of days. This one was sideways. New all-time high, couple of days, pullback. And so it was very, very common to see that. So when we do get above, and I think we will break above, when we do break above and put in the new all-time high, just be aware that we could get a little bit of a pullback for a few days afterwards. And some of these areas of demand will still come into play at that point. So for today in the S&P, there's a little bit of demand down below, 35.69. Now, in the overnight, we put in this little region right here, right there at the London market open on a 15-minute chart, as another area of opportunity. All right. So those are the levels that I think make the most sense in the S&P. When we move to the NASDAQ breakout area still very much in play. This is the level that we talked about yesterday morning We were unable to pierce back above that level throughout the day, but that's okay. That actually makes it a better setup. Um, we pulled down from there, but by pulling down from there, we ate away at some of the sell orders that existed up in this region. And eating away at those sell orders creates a better opportunity for price to rally from that zone and then move a bit higher. And so we'll look for price to move a bit higher off of this if we get quality basing tight to the level. What does tight to the level mean? Inside of about this area. So it needs to be tight inside of about this area for that to be a good level and a good area to get us some sort of a breakout trade. Your question, Kowal says the 3610 area on the 15-minute chart. So this one right here, yeah, I mean that's a pretty good little level. My problem with it would be my recency bias. My recency bias would be my problem with that, and then the fact that we came close to it. But it did serve as a former kind of control line all through here. So I'm okay with it if you want to give that one a go. I would just be a little bit cautious on moving your stop pretty quickly. I like this one here. I'm primarily picking this one because of the time of day. Time of day is really what's giving me this level down here. All right, in the Russell. So the Russell level, looking at our Russell area, we had talked on Monday about this little level here, got a nice little move away from it. We came back down below there yesterday. Now, in looking at it, I really like this area right here if we indeed get a pullback. And this is our very common wick over wick areas that we like to look for. And those wick over wick levels that we like to look for on that smaller time, on that 1 hour time frame, are typically going to be rally-based rallies on the 15-minute chart. And we see a little bit of that in here. It's not perfect. So when I'm looking at the 1 hour, I think that's actually a pretty good little level, 1765, 1762 on a bit of a pullback. Now, in the overnight, once again on the 15-minute chart, your 2 a.m. level that was created, it's still there. It's just not quite as clean because we did get a pullback into that region and it's already been tested. So that's why I like this one here a bit lower. Lee says, is anyone else's YouTube picture fuzzy on their phone? I have no clue, Lee. I just do the same thing every day, and it could be reception if it's your phone. So, all right. And then last is the Dow Jones. So let's look at the Dow. Yesterday we had the level in the Dow right in here. Price came right into the level and then moved away a little bit. So you may or may not have gotten filled depending on where you placed your lines. I think that level's still fairly decent, but it has to be a confirmation. Has to be a confirmation trade if we come back to that zone. Above 30,000 is still our breakout point. Above 30,000 is still our breakout point in the Dow Jones. If we get some basing in here and then we get a strong move away, that would be the opportunity in the Dow for the reversal. 15-minute time period going down to that same 2 a.m. level is a same picture that we have on the S&P is a decent opportunity on that small time frame. So those are our equity markets for today. Let me zoom in on that a little bit so that when I share the screen, y'all can see it clearly. Any questions about today's levels? Any questions about today's S&P, Russell, Nasdaq, or any of the other equity market levels? Couldn't even speak this morning. All right. Well, give me 1 second here. Let me share the grid. All right. Okay. All right. So next markets, let's go to commodities, energies, and metals. All right. So looking here at crude oil. So starting with crude oil. And I had a couple people lately request for me to go a bit slower on the daily market commentary. It's tough for I really want to stick it to a 30-minute markets. So it's tough for me to do a 30-minute market commentary and cover 16 markets. So I may not cover every market every day when I don't see opportunities available on kind of the big four, big square. And so, if I don't cover the market that you want, then let me know and I'll do my best to get to it. But I really want to try to keep this. I promised myself a long time ago I would not let the daily video overrun my life, and 30 minutes is my number. All right. So 15-minute level that I had yesterday in crude oil, we did get a little touch into that zone. Nice, decent little move away inside of that region. Price then came up a second time, popped through, and then old support or old supply becomes new demand. Old resistance becomes new support, whatever you want to call it. Old ceiling becomes new floor, and price moves away, okay? And so I'm going to remove that level altogether right now. Yeah, it's a good point, Jersey Trader. We were seeing some big moves in crude oil and in gold, and we'll talk about gold because our breakout trade was activated. So when I look at crude oil, nice, big, strong move up. Contract over here on the F contract. When I look at this down on a smaller time frame, so, Jeremy, good question on that. Basing in front of that zone, invalidate it. Let me go back to the level itself. It may or may not, depending on your risk tolerance. That was right about right around 1.5 to 1. So I'm okay if that invalidated your level because it was pretty close. The thing that I like about it though was this selling pressure coming into it. So we had these upper wicks with some additional selling pressure. So it was one of those ones. We'll call it borderline as far as whether or not it was. So if you invalidated the trade, there's nothing wrong with that because it didn't give you a great big move away anyway, right? And so since you didn't get a big move away, that helps you to kind of confirm if you sat out, then it was the right thing to do based on your rules. Everyone's got different rules, and that's what's hard when I show these levels is because not every level is going to be a level that fits every one of my rules, but they might fit yours. And so I'd rather show it and give you because I don't know what every single person's individual rules are and what they want to use. I know that we have rules that we kind of stick to and follow the 6 candle rule and reward to risk ratio, but some people won't take a 2-to-1 reward to risk. All right. Some people just a 2-to-1 reward to risk is like, what's the word I want to use? It's like sacrilege. You can't do 2-to-1. You can only do 3-to-1. Well, I don't agree with that. I think 2-to-1 is just fine. Matter of fact, I'm okay with 1.5 to 1 if I've got enough probability. And so it's everyone's got different risk tolerances. All right. So CL, this area right here is the origin of this strong rally higher, right there at a pretty good time of the day that it's formed right there around midnight central. Pretty decent move away. If we get a pullback, you might have a decent area right there on the 4-hour. We were seeing a little bit of weakening in the momentum, picked up some more in the overnight. So let's see if price can continue to run higher from here. Gold last night. We talked about this breakdown line in 1882, right? We talked a lot about this gold breakdown area in 1882. Dennis, depends on your win rate. If you win most of the time, you can do 2-to-1s. No, not most of the time, Dennis. Technically, if you lose, and the math says if you're right 40% of the time with a 2-to-1, you'll still be okay. Think about that, right? If you're right 4 out of 10 trades on a 2-to-1, you'll still be okay. So 2-to-1s are all right with a 40% winning percentage. Now, if you're down in the 20s and if you're in the 20s and in the low 30s, then you want to stick to 3-to-1s. But my assumption is my assertion is that more traders will have higher winning percentages if they take some money off the table at 2-to-1. And what happens is oftentimes people have lower winning percentages simply because they're looking for that higher reward to risk. And then it becomes a self-fulfilling prophecy that you have a lower winning percentage because you're looking for greater reward to risk. Thus is why you have a lower winning percentage. And so it's like a cycle. So that's why I stick to 2-to-1. I think that one gets you there. So, all right. So GC, we looked yesterday about this price staying inside of this gray box's range. And technically, we're still inside of this gray box's range. but we did break out below our 1882 area that we had talked about as a potential breakout. Now, did we get basing immediately before the level? We got it pretty darn close to immediately before the level, and it was a decent little move away. Now, it didn't really go very far. It gave us a retest. If you didn't want to take the breakout, gave you a retest and has traded down in the overnight. We did get a nice reversal candlestick right here, and prices are starting to trend higher. So if you took the iron condor that we talked about yesterday, your bullish trade's obviously looking great. The bullish side of it is obviously, the bearish side of it is always obviously looking great. Excuse me, the bear call. The bull put, you're right down near your short strike. You've not come to your short strike yet. You're still above the short strike, and it's still a trade that's in play. But our rule kind of says if you get outside of a breakout area, then it might make sense to close that thing out. And that's kind of what happened throughout the day yesterday on that. So if we rally back up today, this trade still very well could be okay. That iron condor could be very much all right. But look for a reversal back at this level today, depending on how we make it back up to this range right here after that breakdown. All right. Next would be nat gas. So natural gas yesterday, I don't have anything to talk about. We didn't come anywhere near the level that we identified. Price went sideways most of the day. We rallied up a little bit in the overnight, but our supply level is still very much intact. Copper, HG. So looking at HG on our 4-hour time period, we see that we are going a bullish trend somewhat to the upside. But it's not a super strong one because we did get a really strong pullback here. So I'm a little bit concerned about that bullish trend continuing. And we rallied up a little bit yesterday. I'd be interested to see if we get some basing around this area for a potential breakdown. So keep an eye on that area for a potential breakdown. Oh, yeah. Thanks. No problem, John. Thanks for sending me the question, brother. All right. So let me throw my grid link in there. All right. Ags, let me just pop through and take a quick look at the ags to see if we're close to any of our areas that we talked about yesterday and new items that will have formed. Soybeans is kind of close to our demand area, but it's not, didn't touch it, so it's still in play. Corn, we did have, somebody had asked me the other day about the gap and go in corn, and I said, technically the gap and go is still in play in corn, but it was coming into this area of supply. But this isn't great supply because we're basing below it. We did get a bit of a breakout above it, but it's kind of meandering, right? So if you took it, if you're still in it, you're doing okay. Just move your stop up underneath one of these pivots. If you didn't take it, don't feel like you missed out. Please don't get FOMO chasing this thing back up as we're coming into all this supply up here. I don't have a lot of great demand in order to lean on to add to my charts. This is kind of what we talked about earlier in the session. Don't force a trade if one isn't there. Same thing looking at wheat. Not a lot to add. We came close to this one. We turned it to a confirmation. It's still in play. You do have a better level down here in wheat as a possibility. And then bean oil did actually give us a bit of a breakout above this area. We did get basing in front of the level, got a little bit of a breakout. And then in the overnight, we pulled back and dropped yesterday back into the retest of that area before then rallying higher. So now when I look at this one, the level that I'll add is this area right here. It's pretty similar to the level that we have in wheat. All right, let me share this grid. All right. Next, let's move over to bonds and currencies. So the bond markets and the currency markets are really where we're having a hard time finding a lot of great entries and opportunities. And And I would say that of all of our markets, the currencies are the ones that are really giving us the most fits. I think it's a great way to put it. There's just not a tremendous amount of tradable setups in the currency markets. When I go to the 4-hour chart here in the ZN, we do have an upward trend. We're coming closer to our area of supply. We've not quite gotten there as of yet. Little tweezer bottom here in the 1 hour. So for those of you that are into the candle style of trading, I actually think this gives you a setup right now with your stop below 138.075 and then your target just in front of this area of supply. I think that's actually a fairly low risk entry at this point, depending on your, what you're willing to lose in that position. Because I like tweezer bottoms and reversal candlesticks, and I do like this price shape where we saw a move up, this move up, and then a rest, right? And then a 50% retracement of this line puts you right here to about 175 as a decent little target. So I think that's actually a pretty good area to look for an opportunity. Because when I look at this, this by the way is, I'm going to go with a 38.2 retracement of that move. Right, boom, right there on the 38.2 retracement is where we saw price move and start to head back up. So, it sets up for that nice bull pullback rally that we like to see as our setup. The ZB, the 10-year note, we had looked at this one the other day. Prices are rallying up in this one as well. On the 1-hour chart, it's not as clean as it is on the 10-year. As far as supply up above us, we'd have to look way up here for our area of supply, where we would see price finding a turning point. So I'm going to let this one go for now. Scott's asking if I can look at silver. Yeah, let's take a look at silver before we get into the currencies. So I got a couple lines on here because I think we last looked at it on Sunday. So we had a 15-minute level here on Sunday evening, but the market cut right through that on the vaccine news. That was the vaccine news that cut through a 15-minute level. When I look at this now on the 4-hour, wow, that 4 hour is telling me there's really not a whole lot to be doing here, sir. The 1 hour, that becomes a decent breakdown trade from the 1 hour time perspective. That's kind of what I see as the best breakdown opportunity in the 1 hour time perspective. Moving to a 15-minute chart, if you wanted to look for a reversal trade, you got a little level up here, but 24.63, yeah, that could be a decent little area there on that 24.63. Iron Condor, we can look into an Iron Condor on this one, seeing where it'll give us something. So if I look into this, I'd have to say, well, my spreads aren't really the greatest so far from what I can see. They're not too bad when I get a little higher up. $24 by 23 half, and then 24.75 by 25. That gives you, oh, not 24, 24.75 by 24 quarter. Sorry about that. There we go. That's better. So this has a max profit of 11.85 against a max risk of 13.15. In that case, you're staying between 24 and 24.75. So you're staying between here and here. So you can get a decent reward to risk. Now, I will tell you, I've never done an iron condor on this. So if you're interested, you do have a range here that may be worth taking a look at it. Okay. Jersey Trader, we've actually got a couple of them. Yeah, thanks, John. In the options deconstructed session of the website, you will find that there's a session on iron condors, but also in the strategic options trading class is where you'll find it. So you go to under OnDemand Courses. If you go, actually just go to the already a pro member. You can go into the lobby, and inside the lobby, you will find all the on-demand courses. So strategic options trading. In there, you'll find the Iron Condor class. That's a fairly lengthy one because it covers a couple of different things. It's class number 6. And then also in the options deconstructed sessions, which we got to start another series of that here soon. In the options deconstructed sessions, you will find that there's more recorded videos around each of those pieces. So vertical credit spreads, iron condors right here. So a couple of them in there. And if you don't know how to trade options, well, I got a great place that you can learn. Go to tradersarmy.com. Don't spend $5,000 on an options class, $8,000 on an options class. Drop $149 a month. See if you want to learn how to do options. Okay. So let's move on to the euro. So looking here in the euro, we have on our daily chart very sideways price action in between two ranges, right? The 4-hour, very tight trading in here. I don't think you really have anything of any substance until you come to kind of this area down here of quality demand. If we really want to trim to the hourly chart and look a bit closer, I guess you have this area down here formed last week. If I go to the 15-minute, I mean, you're really looking hard. I just don't see anything worth trading, right? I really just don't see anything worth trading, and so I would step away from that and just leave that one be, frankly. Yesterday, we looked at the Canadian dollar. We did get a little move up in the Canadian dollar up to this region. If you took your stop at the absolute tightest point, that means you literally got stopped out by a tick, which sucks. If you put your stop at the absolute tightest, which would be the wick of the leg-in candle, you put it a tick above, and you literally got stopped out by a tick. And I feel terrible about that, but sometimes that just happens, right? The market just went a little bit beyond our zone and moved the other direction. Trade would have been worth about a 1.5 to 1, maybe about a 2 to 1 on that position, but it just barely came above our level. There's nothing we can do about that. When I look at this on a 4-hour, what's my 4-hour kind of telling me on this one? Same thing that's telling me in the euro, right? I mean, a lot of the same things that we saw in the euro are looking to be here inside of the Canadian dollar. So really just not a whole lot to add there. Potentially could be ready for a breakout, Liz. I just think it needs more time in the oven. I think it needs more time to bake. It hasn't set yet, and it needs a little bit more time in there. Can you tell I've been watching too much of the Great British Baking Show on Netflix? They did a good one last week. They were making strange jellies. I'm a very weird person. When my wife and I do sit down and watch television, we watch some of the oddest things. All right. The New Zealand dollar. Don't make fun of me, Lewis. I still love you, man. I guess it's probably Luis. Look at the 15-minute level right in here. Listen, we don't take much time to decompress, just hang out. So, all right, 6902, 6899, good little area here, wick over wick, above a pivot low. I think that's actually it's pretty decent one. So, for a decent reversal in the New Zealand dollar, looking at the Great British Pound, Nothing really changed from what we looked at yesterday. That's still the area that we see the reversal, but it needs to be a confirmation entry. Has not come back as of yet. I'd still like to see a bit of a breakout. The Japanese yen, this bugger came close to my level, and so I need to switch it to a confirmation entry if you want to try it. And so I'm going to look to this area down here for the better reversal trade. This confirmation's even a bit dicey. Matter of fact, it's too dicey for me. I'm going to move it up to here. Ooh, that's not what I wanted to do. Man, I hate when Thinkorswim does that. My only pet peeve on Thinkorswim with their charting is when it converts from, when it does this automatic thing when I adjust the scale, and then it doesn't zoom properly. So, all right. No problem, Jose. The New Zealand dollar, I look at it for you, man. Now, the Aussie yesterday. So we did get a nice little. We got nicked by a tick yesterday in the S&P, or excuse me, in the Canadian dollar. But the Aussie gave us a nice entry by a tick as price came right to the limit entry with a pretty decent move away. So that one was pretty good. Off of this area in here. So price hits this area. We got a very strong move away, came back to the opposing level. The level was a touch and go, so I'm still going to leave the level on the chart. Now, it was not a great time of day that it met entry. I got that. But you may or may not have been in front of the markets at that point in time. And, I was actually doing a webinar last night at that exact point in time, so it was kind of interesting. All right. So those are our levels that I've got identified for today. Let me do a quick grid share. Tomorrow, remember, we're not going to be on YouTube. Tomorrow is our live trade room where I can go a bit slower and go into a bit more detail. We'll have our live trade room tomorrow at the website. So I will see you all then tomorrow morning. Also, tonight we have our Wealth Essentials class for those of you that are going to be able to make it into our Wealth Essentials session tonight at 7 o'clock. Tonight we're talking about selling calls against stocks that you own. And we're going to be identifying, okay, how do I find some of those calls and taking a look for the return that I want as we are building out our model portfolio. So hope you guys have a phenomenal day. I appreciate you all for coming in, and I will talk to you all soon. See ya.